Module 1.6, Why Markets Move. Your learning outcomes from this particular unit are to understand the underlying principle of what moves the value of a currency. We're going to define the key factors that influence this and how it impacts on sentiment and ultimately price. Identify how this, in practical terms, may influence your trading decisions. So here's the bottom line. Continuous movements occur due to changes in the market's perception of a country's economic health, both now and projected, or in other words, in the predicted future. These perceptions change as new information comes into the market, usually in the form of economic data, events, and movement of other financial instruments. It's major data releases or events that tend to create the faster and more significant moves in value. And of course, we're going to cover these in a future unit, specifically on economic data releases. Additionally, institutional and individual investors are constantly reviewing and altering their positions, both to profit and to hedge other positions that may be open. So this is how it happens. As was stated already, so we get news, other asset class movement and position adjustment occurring, and this tends to be related to something we call fundamental analysis. This creates a change in sentiment, which may be positive or negative, which we can see on a chart, and this is termed technical analysis. So you get a move in value. And it's the constant interplay of these factors associated with fundamental analysis and the resulting change in sentiment that keep that price moving continuously. So having some knowledge about both of these components, as I'm sure you can see, is important in your decision making, both in entry and exit. So what this means to you is the following. As part of your trading system and behavior, it seems logical to have a big picture, longer term view of any currency pair to gauge overall market perception. Be on top of any economic data releases that may impact on a currency pair that are due, and of course, learn which are the potentially major market moving data points, as not all economic data moves the market in the same way. We have an overview awareness of what's happening in other asset classes, such as the major indices, for example, the S&P 500 from the US, and of course the major commodities such as oil and precious metals. And identify clear points on price charts that indicate sentiment may have changed. And of course, this may influence your entry and exit decisions. And what this also means to you is that these are important in making choices, decisions, and developing your own trading system. So you need to learn how to do all of the above. And as previously stated, future units in the course will cover these topics and build on these basic principles, including the economic data and identifying potential changes in sentiment using price charts. So your actions from this unit: on your demo account, open a short time frame price chart of a Euro USD or an Aussie Dollar USD, for example 15 minutes, just before an economic data release is due. And you can go to the GO Markets website and see the economic calendar for when this might happen in your time zone, and then observe the impact of this on the price action. This will help ram home the point that economic data is important, and you'll see the sentiment change in the reality of the market. We look forward to seeing you in the next video.